All right, we've got an Edmonton housing market update for you for the month of September 2024. We're going to be taking a look at what's been happening over the summer, where the market's at in terms of pricing, inventory levels, and just what's going on in the market in general for detached homes, half duplexes, apartments, and townhouses. So let's jump right into it. All right, let's look at the market as a whole. So this is total residential. It's basically a snapshot of the entire market in Edmonton. So it's bringing all the data in together. If we look at the absorption rate, it was sitting at 41.75% in August, which was just a slight drop from July, so it's remained pretty balanced there, right in the middle of a balanced market. The average price was sitting at $403,923. At the end of August, there was 4,273 active listings still on the market, and there had been 1,784 sales. So the number of listings was actually up a little bit from July, but barely, up 0.56% from July. But that inventory level is still down from last year. It's down 12.04% from August 2023. And the sales were down 11.42% from July, but up 11.92% from August of last year. So a bit of a drop in sales from July to August, but as you can see, the sales are still up from last year, even though inventory levels are down. So that's how come the market feels quite a bit different this year than it did in 2023. Average days on market was sitting at 34 days versus 33 days in July, so not much of a change. But if you look at August of last year, it was at 47. So that's a pretty significant drop in the number of days on market. And now looking at the market distribution, this is just like what bracket of price the transactions happen in. Under 200,000, that represented 16.59% of the market. Between 2 and 300,000 was 15.28, and between 3 and 400K was 20.45, and the largest segment was between 4 and 500K with 21.83. Then there's a pretty big drop there once you get over 500K. Between 5 and 6, you've got 12.81% of the market, and then 6.4% between 6 and 700K. It's quite small market segments after that. Now, since we were just looking at the market as a whole, in terms of benchmark prices, the best one to look at is the composite, and this is basically just showing what prices have done across the market for the benchmark property over the last 5 years. So I've got it going from August 2019 to August 2024. You can see that in August 2024, the composite benchmark price was sitting at $396,900, just down slightly from July, nothing crazy there. The peak might have been June, and then it was down a little bit for July and pretty much the same in August. And you can see that's a pretty decent run since prices were at their lowest in November of 2023. You could go back even further, and it looks like December or January 2022 was when they were really at their lowest. Now, the composite price has not reached the peak that it did in April of 2022 when it was sitting at 407,300, but you can see we're not really that far off from that, and we have, like I said, had a pretty decent run since November of last year, with prices going up quite a bit this year. All right, now let's look at the detached home market. Probably my favorite market segment, or maybe it's everybody's favorite market segment, because that's where a lot of the action is. The absorption rate was sitting at 44.78%, so that's still a balanced market, but leaning slightly more to the seller side on average. That will vary by smaller market. Like, this is just looking at all of Edmonton, but there's going to be certain neighborhoods or certain parts of Edmonton where it's going to be lower or higher than that. That stayed relatively consistent since June. Like June, the absorption rate was at 45.81. So, you know, you've just kind of been bouncing around that 45 number pretty closely. It did peak in April, which is not a huge surprise. That's right in the middle of the spring market. But yeah, I would say that things have remained strong. We didn't see much of a dip in the absorption rate over the summer months, whereas if you look just at last year, look at the absorption rate in August of last year, we're sitting at 31.32%. So it was just barely a balanced market, almost falling into buyer's market territory. That has not happened this year, and they have started obviously reducing interest rates. We just had another interest rate cut here earlier this month. There's more expected. It's hard to say exactly how much that's playing into, I guess, buyer sentiment in the market, but I do know it's at the top of people's minds. Like, all of my clients that are buying, it's a common question like, hey, there's another meeting next week. Should we wait to see what happens with that meeting before we pull the trigger on a property? So I'm seeing from that side, a lot of the buyers are obviously hoping to get the lowest interest rate possible. So that's sometimes causing people to either delay or at least have the conversation about seeing if they should delay until interest rates are lower. One thing to always keep in mind is, from what I've seen, at least right now, and this could change, most people are still going going with a fixed interest rate. So usually a 3-year or a 5-year. I haven't seen a lot of people going with the variable yet, although some of the advice I'm seeing from brokers and people that watch this more carefully is it might be a time to consider maybe looking at the variable again, since one thing to keep in mind is that when the Bank of Canada drops the rate, that doesn't automatically make a fixed rate go down, because that isn't like directly adjusted by that. What will go down is a variable rate. So if you have a variable rate mortgage, or you're planning on getting one, or if you have a HELOC, a home equity line of credit, that will directly drop your interest rate on that, but it won't automatically cause a drop on the fixed term rates. Does it affect it? Absolutely. I'm definitely no expert on that. But the thing to actually watch if you want to see if fixed rates are for 3-year and 5-year are either going up or down is you can just basically look at the 5-year Government of Canada bond rate. And if that's going down, then you know that the fixed rates will be going down shortly after. And if that's going up, then you can expect the same. So that's something to keep in mind. If you're just thinking that your fixed term rate's going to drop immediately when you see a Bank of Canada cut happen or coming up, it doesn't quite work that way. Bit of a tangent there. Let's continue on here with detached homes. So average price was sitting at $527,956. If you've been watching me for a while, I don't put too much weight on the average price, especially when it's just on like a monthly average price. Average price would be better to look at probably like on a rolling 12-month thing if you were trying to get a better idea on what was going on. I prefer to use the benchmark price because they use better data there, and it's a consistent description of the type of property that's selling in terms of like size, number of bedrooms, bathrooms, that kind of thing. So we'll look at that a little bit later on here, but that's what the average price is sitting at. The number of active listings at the end of August for detached homes was sitting at 2,010, and there had been 900 sales. So the listings were down 10.86% from July. So the inventory is dropping, and that's a significantly less than what we had in August of last year. That's 26.29% less active inventory than August of last year. And that right there explains that huge difference in the absorption rate, where it was almost a buyer's market in August of last year, whereas it's over the halfway point for balanced this year. Now, number of sales, that was down 14.37% from July. Again, not a huge shock. Like July was quite strong. The number of sales in July was actually higher than what we had in June, which is rare. So July was exceptionally strong. Usually we would see a drop in sales going into July, like the peak's usually April or June, sometimes May. So it's normal for there to be less sales in the summer, but the summer has overall performed quite well. So even though you see like, oh, sales are down, that doesn't mean like the market's going to shit and prices are going to drop automatically kind of thing. Like that's a normal seasonal change, and it's been performing better than typical, or at least recently. Those sales are still up from August of last year though. So there was 5.39% more sales than there were August in 2023. Average days on market sitting at 33 days. That's pretty healthy. If you're selling a detached home and you price it right and it doesn't need a whole bunch of work, you know, you've kept good care of it, it doesn't need a new roof, flooring, windows, like all that kind of stuff, you can usually expect your property to sell relatively quickly if you've priced it right. And if it doesn't, then you did not price it right. 31 days was where we were at in July, so just a small drop versus 44 days last August. So still performing a lot better, similar to the composite. Now looking at the market segments, you can see there's barely anything in the detached home market selling under 200K. Then there's 4.33% between 2 and 300K, and 18.94% between 3 and 400K. There's still a lot of people who would love to buy a detached home in that price range, but it's getting harder and harder. A lot of the prices have been pushed up. You're looking at smaller, older ones in a lot of cases. And I think that's part of the reason why we're starting to see more people in the townhouse market or residential attached, that kind of thing. Biggest segment was between 4 and 500K with 30.89% of the market, and then 21.56% of the market between 5 and 600K. Then there's a pretty significant drop there to the 6 to 700K bracket with only 11.27% of the market, and just over 5% between 7 and 800K. After that, it gets pretty small. So since we've been looking at detached homes, now I want to look at the benchmark prices for detached homes. Now I've got this separated into 2 different categories, 1-story and 2-story. They both have different descriptions on exactly what the attributes are in terms of age, size, all that. I'm not going to go into those details right now. This is just still relatively high level overview on what you can expect to have seen happening with 1-story single family homes, which would be, you know, bungalows, bi-levels, raised bungalows, that kind of thing, and 2-story homes, which pretty straightforward. You got your main level, you got another level upstairs, and you would also still have a basement in most cases. So we'll start with 1-story single family homes. The benchmark price in August 2024 was sitting at $416,500, which has had a pretty good run. Like if you just look going back to November 2023, it was sitting at $369,400. So over $45,000 increase, $47,000 increase just since November of 2023. That's more than a 5% down payment. Like that's around 10%. It's a little bit more than 10%. If you chop 10% off that August 2024 number, you're still ahead of that November 2023 number. So we've had a pretty good run for the 1-story single family homes. Most of those I've found to be older. It's not as common for them to build. If you look at all the newer neighborhoods, the new suburban sort of areas, the vast majority of the places that they're building are 2-story. I'd have to go double check, but I would suspect that the benchmark description for this is an older property, not something that's super recent. And I have seen a lot of competition in that market this year, just because they tend to be the more affordable detached homes that are still available. If you're trying to get something under 450, 400-ish, a lot of people end up going over there. So I'm not surprised that we've seen some pretty good price growth in that market. And you can see here, I didn't highlight the number, but the peak was last May 2022 roughly. And you can see we're above the peak prices that we saw in May of 2022. So even though that we had the big interest rate run up after that, and the interest rates are still higher now than they were then, for sure, the market has climbed since then. Obviously, now we have people getting excited, or at least some people getting excited about interest rates dropping. So as I mentioned earlier, that is definitely part of what's going on. But it's interesting to see that we are actually past the peak from 2022. All right, so let's look at 2-story benchmark pricing. So this one looks a little bit different. So you can see here in August 2024, benchmark price was sitting at $523,800. And if you can see, kind of the lowest point in the last year was January 2024. It was sitting at $480,900. That's still a pretty good run. That's also pretty close to that $45,000 increase. So it's similar in terms of total dollar amount increase that we've seen on the 2-story versus the 1-story. But the 2-stories were already at a higher price point. The 1-stories were at under 400 before, and they gone up to 416, and the 2-stories were at 480, and then they went up to 523. So the percentage increase is higher on the 1-stories than it is on the 2-stories. And you'll also notice that we have not quite reached the peak of April 2022, and it was sitting at 531,200. My knee-jerk explanation for this is because it's at a higher price point. Yes, it's been performing great since January in terms of price gains, if that's what you're looking for, and it's done well. However, it's already at a higher elevated price point compared to the single-story detached homes, and so I think there hasn't been quite as much of a frenzy there, and it hasn't been able to push it up at least at the same percentage as it did for 1-story single family homes. The reality is that this is less affordable for more people, and there's more people that are able to afford something a little bit cheaper, but obviously it's still rocking and rolling and performing quite well in terms of price growth. All right, now we're going to look at the semi-detached market. This is, in my understanding, is that this basically includes half duplexes. I believe residential attached goes under row/townhouse. I've been meaning to check on this, on which category residential attached goes into. I suspect it goes into row/townhouses. I could be wrong. So if you happen to know, let me know in the comments, but I have to check with the board and ask them, just because they did kind of move stuff around, so I'd like to confirm that. But for now, let's assume semi-detached basically just means a half duplex, okay? That would be the most common property type like that. And you can see that this market is pretty hot. The absorption rate was sitting at 83.55%. That makes it a strong seller's market, and it's been seller's market territory since February, basically, is when it first, the needle moved into the seller's market category, and it went pretty strong up until May. It dropped a little bit in June, July, and then it's right back up, and it's peaked for the year in terms of its absorption rate. Average price was sitting at $414,242. Number of active listings was sitting at 231 at the end of the month, and there was 193 sales. This market's like roughly a tenth of the size in terms of inventory compared to the detached home market. I think there was just over 2,000 active listings for the detached home market, and there's 231 for this. So I've said this before, I'll say it again. It's much easier to see big swings in the absorption rate, and whether it goes from buyer's market to balanced market to seller's market in a market segment that's smaller, right? When you've only got 200 and something active listings, if you have an extra 50 buyers that month, that moves the needle quite a bit. Whereas if you've got 2,000 listings, an extra 50 buyers will move the needle, but not nearly as much. So the active listings seeing a significant drop from July, 23.51% drop, and a 34.19% drop from August of last year. Sales were down just a little bit from July, down 3.02, so less of a drop than what we've seen in the other market segments so far, and it's up 6.63% from August 2023. Average days on market sitting at 30, bumped up a few days from 26 in July, and it's down 16 days compared to August of last year. Market segment here, you got 1.3% under 200,000, 10.85% between 2 and 300,000. Between 3 and 400,000, you got 34.04% of the market, so a big chunk there. And then between 4 and 500,000, you got 38.4% of the market. Not much over 5, but you know, a little bit here. We got 10.91% between 5 and 600K and 3.14% between 6 and 700K. All right, now we will look at row/townhouse market. Also super hot. Our working definition for this right now will be basically townhouse condos and residential attached single family. It's titled single family. There's way more townhouse condos than there are residential attached, so that's gonna be most of it. Absorption rate was sitting at 81.61%, which is also crazy hot seller's market territory. It's been hot again since February. It was pretty balanced in January, but February it ramped up, kind of peaked in April, came down a little bit in May, June, July, and it's back up again. Average price was sitting at $286,091. We do have benchmark information for this one, so stay tuned for that. Active listings was sitting at 386, and there had been 315 sales. So you'll notice this market also is relatively small, but it is significantly bigger than the semi-detached in terms of listings and solds. There's 386 active versus there was like 200 and something in the other one, so it's a bit bigger market. Active listings are down 20.9% from July and down 25.77% from August of last year, and the sales were just barely down 1.56% from July, but up 11.7% from August of last year. Average days on market sitting at 29 days, so it actually shaved a couple days from July, and it's down significantly from the 43 days we saw in August of last year. Under 200,000 is 20.98% of this market. Between 2 and 300,000 is 34.78% of this market, and between 3 and 400,000 is 35.49% of this market. And we got a little measly 7.45% between 4 and 500K, and that pretty much covers everything. Now let's look at the benchmark prices for townhouses. Now this is exciting, depending on how you look at it. If you already bought, or you bought a while ago, it's exciting, but if you haven't bought yet, it might be scary. Now, August 2024 had a benchmark price of, I think it says $264,200, which has had a pretty good run. I went and showed the low in February of 2023 where it was at $210,600. So this market has been quite hot. We had a peak, the last peak before that was June 2022 when it was sitting at $247,600. We're up not quite 20K from the peak of 2022, but not far off. So this market is probably performing stronger than anything else in Edmonton in terms of price growth. And I think that's just because it's getting squeezed. Less people are able to afford the higher priced detached homes, pushes more people into the townhouses. It's the closest thing you can get to a detached home feel that doesn't feel like an apartment. So I think that's a big part of it. I've definitely seen strong price growth this year in townhouses, even with the point, like I had properties I listed in February and we had it at a price point that felt a little unrealistic to me initially, but the market kind of caught up to us, and then we were able to sell for a much higher price than the comps had said before that. Been a good year for people that were looking to sell their townhouses, or they'd been on the sidelines waiting for a while to sell. Still a good time to sell townhouses. Yeah, things have been moving pretty good in the townhouse market. Okie dokie. So last but not least, we got the apartment condo market, which will feel much different than the others. The absorption rate was sitting at 30.32%, just right on the line between buyers and balanced market. It's been a familiar story for apartment condos. They have not been hot. They have not been hot for a long time. If you look at the 13-month history there, you know, we have a few blips up and down. Looks okay in the spring sometimes, but still barely gets into balanced market territory. It hasn't been anywhere close to a seller's market anytime recently. Average price was sitting at $200,457. We do have benchmark info. I'll go into that next. Active listings was sitting at 1,240, and there had been 376 sales. In terms of the actual inventory that's available, there there is inventory available for Edmonton to have a robust apartment condo market. The sales just aren't there to move nearly the number of these that we do for detached homes. But if you look at that inventory, yeah, it's less than what we have for detached homes, 1,240 versus I think it was 2,050. Still a significant difference there. It's way bigger than the half duplex market or the townhouse market. There's way more buildings and apartments available. I know there's a ton of people that love to sell their apartments, haven't been happy with prices yet. And there's still that hope that for people that have been holding on to apartments that we will see price growth in them. A lot of people that bought apartments 2015, 16, 17 have seen significant drops in the value of their apartments since then. You know, some people are taking losses on them and moving on. Others are holding on, hoping that prices will eventually come back to where they were, or, you know, even go above that at this point. Let's look back at the numbers here. So the inventory was down 10.98% from July and down 14.84% from August of last year. And the sales were down 16.07% from July and up 30.1% from August 2023. So that's a significant increase in sales compared to the August of last year, at least. So you can sell your apartment condo. You just have to have it priced right, and you do have to be patient. It's a way slower market. I've found in most cases, you're kind of lucky to get a showing a week on average. If like maybe you'll get a few more initially when you first list it, you get 2 or 3 showings your first week or 2. In a lot of cases, every once in a while, there's one that hits and just like people really like it and it does move. But a lot of the time, it is a bit of a waiting game. Usually you have to price it lower than you want. That's my experience with the apartment condos. That's fun if you're buying, because there is a decent amount to choose from. Prices are lower than they had been for a long time. Not a bad time to buy an apartment. Average days on market is sitting at 42 versus 44 in July, and that versus 58 in August of last year. So that is a pretty big improvement in terms of just the number of days on market and stuff. And now you can see that the vast majority of the apartment condo market's under 200,000 with 60.41% of the sales. Which another thing that you might be able to take away from that is that it's harder to sell the fancier, luxury, more expensive apartment condos. If you've got 60% of the market is buying under 200,000, that only leaves 40% for everything above that, right? Between 200,000 and 300,000 is 30.46% of the market. So if you're looking at your apartment, or you're looking at apartments that you know are pushing 300, you're starting to get into a segment of the market that is very, let's call it competitive for sellers, because there's not a lot of sales happening. After that, there's 1.52% between 4 and 500,000. All right, let's look at benchmarks. All right, so maybe I'm coming across too negative, because when you look at the benchmark prices, it doesn't look too bad. August 2024, we're sitting at $193,300. And in January 2024, it was at $170,700. So that type of property, which I would assume is probably like a 2-bedroom, 2-bath apartment condo. I wouldn't be surprised if that was like mid 2000s or something. That is still decent price growth, which when you look at the market as a whole for the apartments, it doesn't even make sense that it would have went up that much just based on the balance. But that tells me there's more to look at there. You actually have to look at a smaller part of the market to really see what's going on. That market as a whole thing might be a little misleading, because that doesn't really correlate with prices going up 23,000 for apartment condos. So that tells me the benchmark description here, those ones have actually been moving decent since January, and they've had price growth. But there's a whole bigger part of the market and apartment condos that are not. So could be that price point thing that I was talking about. June 2022, the prices were $179,700. Well past the peak. I don't even know if I'd call it a peak in June 2022, because it was pretty similar to May 2021 and, lower than what we were at in May, June 2019. But that is a time period where a lot of people think of as the peak of the market, especially in other markets across Canada. But yeah, that's where we're at for apartment condos. I hope you enjoyed this Edmonton housing market update. As you can see, there's a lot of different variables that go into this, and things can vary by market segment and price point. If you'd like to get some of my personalized advice and guidance on this, then I suggest you set up a free 30-minute strategy consultation call with me. You can go to booktrevornow.com, select a time on my calendar, and book a free 30-minute call so I can help you on your journey of buying or selling a home in the next year or so. All right, thanks so much for watching, and I will see you on the next video.